So today I want to talk about lowering your mortgage payment. And I want to talk about some outside of the box thinking ideas about lowering your mortgage payment. So we're getting started right now. Stay tuned. Hey, welcome back, y'all. I'm Debbie Dobbins. I'm your host for this episode of Your Wichita Falls. And today I want to talk about how to lower your mortgage payment. And, I think what happens a lot of times is that people get so confused about these interest rates and they get so stuck on it. And that seems to be a modality for life in general, is you get into a track, you believe what you believe, you get stuck, and then you can't get unstuck. So let me see if I can help you get unstuck about buying your next home or relocating from the home that you're in to the next home. Because at this juncture, there's so much going on and so much misinformation. I just want to let you have an opportunity to breathe and to see things in a different light. For those of you that know or watch this channel, you know I love Wichita Falls. I love to share about all things Wichita Falls. And if you don't know anything about this channel or this is your first time, I'd love it if you'd subscribe, ring the bell, and you'll be notified every time we upload a new video. Because as a real estate entrepreneur, I love sharing about how it's possible for you to have the American dream. So anyways, the interest rates, unless you're living under a rock, and I live under a rock with the news most of the time, but I still know that the interest rates have climbed and climbed and climbed and climbed. And you can certainly peruse this channel and find out about all of my feelings about our Federal Reserve and what they're doing. But here's the thing. You have so many components in a mortgage payment. Now, I'm going to talk about this for those of you that have everything included in your mortgage payment, and it still is relevant if you don't choose to have your taxes and insurance included in your payment. Because one of the things that I always recommend, which most consumers, borrowers, don't want to do because they don't want to think about it, is don't let somebody else handle your money, the IRS or your mortgage company. But this case, I'm going to talk about the payment itself. For those of you that are fairly new, or maybe you're seasoned and you just don't realize, unless you get an escrow statement at the end of the year, which most of you probably are going to get one this year that's not going to be very friendly, you don't realize that's a direct impact on your mortgage payment itself. So what's in your mortgage payment is what we call in the industry principal and interest, P&I, taxes, insurance, and then if you put less than 20% down, you have what's called mortgage insurance. It's either through the government, FHA, or a private mortgage company. But here are those components. You've got principal and interest, taxes, insurance, and mortgage insurance. So how much of that can you control? At least mitigate. All of it. And here's why. Is your principal and interest is your mortgage payment itself. The principal and interest. Well, clearly you can control the interest rate. There's a lot of different programs out there, especially in a market like this. You want to start to pay attention to things that are not just a straight fixed rate loan. Now, I'm not talking about those designer loans that we did back in 2008 and prior to that. Those are crazy. But an adjustable rate mortgage has been around forever. You can have an adjustable rate mortgage that is anywhere from fixed from 3 to 10 years. So you can have it fixed for 3 years and then it begins to adjust 5, 7, 10. And it's more or less like a fixed rate loan anyways, because most people don't even live in their house for 7+ years. So if you're looking at that, now I will say that adjustable rates that are fixed adjustables don't have a tremendous difference right now because of the market and the climate that we're in. And that being said, there are other types of ways to mitigate that interest. One of those is what's called a temporary buy down. So we have programs that are temporary 3, 2, and 1 buy downs. The way that those programs work is that you have your seller, so when you're making an offer as a buyer, and this is great for sellers to offer it to potential buyers because it makes your house more attractive. So you as the buyer ask the seller to pay for your temporary rate buy down. What this does is it takes your interest rate that's a starting interest rate. So right now we're at 6.5 to 7%, and you start 3, 2, or 1 below whatever that rate is. So let's use the 2, 1 buy down because I think that that's the most feasible for most people. and it doesn't cost the seller as much money. Your seller will pay for, so for instance, on about a $150,000, $200,000 loan, your seller is going to pay between $3,000 and $4,000 to buy that down. Each case is different, depending on the loan amount. You're going to ask them, and they're going to pay that money to whoever the lender is. The lender's going to put it into that thing called a little escrow account, and it's going to sit there, and every month it's going to reduce your payment from that 6.5% interest to 4.5% interest for the whole first year. Then on the second year, it'll be 5.5% instead of 6%. And if for some reason you go to that third year, it will go to the 6.5% interest. The good news about temporary buy downs right now is, number one, you get the benefit of having a much lower interest rate. And these interest rates, according to all the experts and all the videos that I've done, are going to go down. I mean, you can't keep going on this trajectory. The Fed will ultimately pivot. And the consensus amongst all the pundits, including myself, is that will begin to happen sometime in the second, third, fourth, maximum quarter of 2023. So you get to refinance then at a lower interest rate. Here's the better news, is that all of that money that sits in that little escrow account that the seller paid for can be used for closing costs for a refinance.
What? Mind blown.
So you're really getting so much benefit out of a lower interest rate. If your mortgage payment goes down $50, $100, $150, $200 a month as a result of this 2-1 buy down, holy moly, you've just controlled that. So your principal and interest can be mitigated or controlled by doing something unique outside of the box that's still very, very safe for you as a consumer, that you can begin to look at principal and interest being lower. Now, the other two items that I talked about, insurance, absolutely. Your homeowner's insurance. Do you know, when I get quotes for my borrowers, the wide, vast gap in prices for insurance, for homeowners insurance, is huge. It's absolutely huge. A lot of you don't know, I'm not an insurance person, but I know enough to give you some insight. You can get total replacement coverage, which is very, very high. But here's the thing. Let's say that you're buying a house that's 2,000 square feet and it's 100 years old. You're going to pay way more on that for insurance, because they're going to do replacement coverage costs, which is rebuilding a 2,000 square foot house at today's market. You might get that house for $95,000 or $100,000 purchase price, but you're going to pay coverage on it somewhere in the neighborhood of $400,000. So think about this. How can you mitigate the coverage? Maybe you don't want full replacement coverage. Maybe you want enough coverage to pay for your mortgage, or you know that you can rebuild for less. Or in the case of the roof, you might have a higher deductible. So there's lots of ways to begin to understand that your insurance premium, which is a part of your payment, if your insurance premium is $1,200 a year, that's $100 a month on your payment. If it's $2,400 a year, that's $200 on your payment. So if you reduce it or you mitigate it, then you've lowered your payment again. Now, property taxes. People say, well, the property taxes are the property taxes. Oh no. Well, especially in the state of Texas and here in Wichita Falls, your property taxes can be lowered just by filing a homestead exemption. I cannot believe, honest to goodness, how many people I see when I'm doing their, either giving them an estimate of how much it's going to be to sell their house or buying a house, and I look at the property taxes on what's called the CAD, our tax appraisal district, and they have not filed for homestead exemption. That's $40,000 right off the top of what the valuation is. And in this last year, the property tax appraisal district raised prices so high because they don't have an algorithm that is an appraiser that walks door to door to door. So many people, their house was over appraised and they were paying higher rates on that. So I've done a couple of videos on taxes. I would invite you to go and watch those because they're very, very informative. And that's just another way to get your taxes down. If you're a veteran and you've got any percentage of disability, there's another exemption. Seniors have exemptions. So think about all the ways that you could file for an exemption for your taxes to get that rate down even further. One last component is that mortgage insurance. So if you put less than 20% down on your down payment, or you reach a valuation of having 80% equity in your property, you can remove that thing called mortgage insurance. FHA just lowered their factor for mortgage insurance. I think it was 1.25 for years and years and years. And so 1% of the value of your property divided by 12 is what gets put onto your payment every month. It can be in the hundreds of dollars in some cases. So if you have the ability to put more money down, in FHA and conventional, it can be reduced percentage-wise, even if you don't have the whole 20% to put down. Say you only have 10% to put down. But what'll happen is you'll reach that threshold of 80% faster every time you make your mortgage payment, so that number, that figure, that extra payment that's included in your payment will disappear. So this is really good news for people that are looking to buy a house, is that you're not stuck with this payment that's in a box. Think about all of the components that go into it, which again are your principal and interest, your taxes, your insurance, and the mortgage insurance. And if you have any questions about how to navigate those waters, again, I am here to serve. I love helping people understand the process and get the best opportunity for themselves that they can right now, given the fact that our economy seems a little wonky. There's 2 more videos coming up, but you can always connect with me. There's a Zoom link in the first comments below so that you can schedule a one-on-one meeting with me, and I would be happy to share any of these things with you, go over them with you, and explore what your next dream house looks like. So as I always say, y'all come back now. You hear? Bye-bye.